Welcome to TradeTheMBI.com. This is John Supporters for the 4th of August. And, well, no surprise what happened the other day. We actually broke below the support and went right to the ABM red right there. And then saw some support coming in there. You know, this is about the time that new fund money comes in. But when we look at the readings here, we've got that complete breakdown of the shakeout. The extreme is still below the red line, which means supports are going to be difficult to maintain without that right there, which is the short-term buyers popping in, and this could be the start of that fund money coming in. We've got DOC orange fading right now. This will be an interesting one because if this tips back up before dipping below the red, then we've got a continuation move to the south side. And of course, positive extreme marked right here on the daily. 44.66 as the broader overall goal, particularly within the overall week readings that we're seeing at this particular stage. But we're also getting a pretty quick reset of the MBI magenta in that. So these are factors that will just cause us to bounce back and forth a little bit, but supports are going to be much more difficult to hold from an ES standpoint. So it's going to be up to the NASDAQ to maintain that support and not looking particularly great with the rise of MBI white over magenta and that. So short-term buyers here is going to be the relative key in maintaining any levels of support. The fact that the NASDAQ doesn't have a dip below the red line is much more bullish. From that standpoint, you just don't have a buy configuration at this particular stage from a daily. So intraday, we're going to see any kind of turnaround. But NQ below 76% and holding right underneath there. And if we look at positive extreme, again, it was the secondary one, and we've already filled it now with the move yesterday. So that's relevant from an NQ standpoint. The question is going to be now whether or not they'll be able to sustain it. And short-term buyers could be enough to hold it up. Not all that great, though. So I would look for more volatility range, which is kind of expected. And guess what happened to the bond market? They finally recognized what we've been talking about for, well, quite some time, that there wasn't going to be a move from the Fed. And once oil prices started to push back above the mid-70 range, I warned that this is where things were headed. And you can see that drop off significant. A little bit overreach. I think there's probably going to be a little bit of a bounce back, but needless to say, finally a recognition of real rate understanding. And that takes some time sometimes, for the market has thought they could bully Powell for some time, and he's shown quite a bit of resilience within the attacks. So, and the economy has held up relatively. I mean, I wouldn't call it great or anything like that. In fact, there's a lot of problem areas, but it's been sufficient enough to maintain things. And, you know, even with the oil dip that was there, pushed right back up immediately. No shock with that. And again, this becomes an issue because supply from U.S. domestic side has softened as far as production goes, and demand hasn't really decreased. So ergo, you got a problem. And until the U.S. turns on the spigot, this could get out of control quickly. And now there's no ammunition left because you don't have the strategic petroleum reserve excess that was used last time to contain things. And the real big problem for that is the EU, because how are they going to justify with rates rising in the U.S. and that capital flight is a real risk? And why would you want to keep a euro when the economy is far worse and the situation is rather ugly? So the fact that they were able to push a short cover to the other side probably isn't going to help much, particularly with, like we talked about before, during this rise, the report from banks and that loan volume is at a nil. And so where do you get the creation of new money? It's a real issue for the EU, and that would have an impact on S&P earnings for sure. So something to keep note of as we start to see some of this deterioration. Makes no sense on the depletion of gold here, but as we've talked about before, a lot of gold now is traded on contract versus the actual physical, and I think that you're going to have to see a major pushback up for actual physical demand in that, because it's going to start to rise. There's no way around it with what we're seeing from oil, and that may take a little bit of time for it to do it. So I think a lot of gold traders seeing this as a pretty nice discount to where things should end up going. Zero activity from crypto, and we talked about why. Just no real impetus, and the long threat of that central bank digital currencies. It's a death knell for most of the cryptos, other than those that are trying to hide things. Here it is from the 50K standpoint. So complete breakdown there, filling all the way back in, making new lows, and then popped up briefly. And here we are in the post market after attempt at creating some short cover, but all that did was allow more shorts at a little bit higher price, so they weren't afraid to unload into that at this particular stage in pre-market atmosphere. So when we look at it from an intraday standpoint, we started off the morning, was a nice push back up, and that's just been this case for quite a while. Every time there's just that push, plenty of new sellers coming back in, filling positive extremes, and then taking things back even lower. And so as we ended the day, there was that little push up to shake out weak hands, and then we pushed back across. But as we can see in after hour trading, things held up for a little bit, but most recently fading pretty fast. So no shocks with any of this, all pretty consistent with what we've been seeing for the readings. I think that it's still going to be a back and forth situation, but overall the bias is still to the downside at this particular stage. So keep that one in mind. As always, though, trade well. We'll talk to you later.